Hey, what's up, party people? It's Bass Fresh dropping some conscious crypto. Once again, I had a little bit of a hiatus because honestly, I got a little nihilistic and I was making money and I was like, well, what's the point of all this money? And what does this mean for my life? And does anything really change? And have I made the world a better place? And I got fucked up. I got stuck in my head for a minute, man. And that and my small business consulting preoccupied a ton of my time. And this is something that I like to do, though. I enjoy these journals, and this is a day trader's diary entry updating with the fact that I passed phase one of the FTMO 200K challenge. Now, I'm going to review what exactly the account analysis is based on what FTMO gave me, and then review it with my commentary, because honestly, this was a very interesting passing of this challenge. It felt rather effortless. So here we go. Let's just jump into it, man. No wasting time. So again, disclaimer, this content is the sole opinion of the FTMO.com. But these are the facts. These are the stats. During the FTMO challenge trading period, I traded 25 trading days. Okay. It took me 70 or so days. And that's because I just wasn't trading a lot. One or two trades a week, really. Maybe a couple trades in a day. And I just see if this would play out, give them about 48 hours. And if they moved for me, awesome. If they didn't, so be it. And honestly, a lot of my trading sessions or entries were in Tokyo. So I had found that I had time at night. I didn't have as much time in the morning to essentially do what I needed to do to get ready for my day and still trade. So I am in Colorado, and that's just Mountain Standard. So 25 trading days, which met the objective. Total of 49 positions, which averages out to 2 positions a day. But again, I was not taking 2 positions a day. I was often taking 2 positions at a time based on what I saw. And a lot of those were US JPY, so dollar yen, and Euro USD. I took a lot of Bitcoin, a lot of ETH as well. I took some ADA trades, but like the liquidity is not as good in this platform in the sense that you don't get any leverage in crypto, and that's a bit of a bummer. And so I actually, even with a 200K account, like at a time, I think I could only actually buy, 3.5 Bitcoin as a position size. So I had to put like all of my capital down as margin, so to speak. And that prevented me from taking other trades while that was open. So I actually keyed in more on dollar yen and Euro USD, and it played. And I'll show you what happened there. Here's what is the most fascinating part about this journey is I want people to understand and acknowledge that you can be successful with a 44.9% hit rate, right? So 45% of the time, less than half of the time, I won trades. Less than half. Now, how's that possible? Well, if you know anything about trading, you know that then my risk to reward ratio must have been pretty good. It wasn't crazy good. It was a positive risk to reward ratio. The value is 2.7. 2.7. That to me is nuts. That to me is absolutely nuts. And it's nuts, except I know this. So I'll go to my P&L. Pull up my equity, my dashboard. Let's go dashboard. And if you look down here in the bottom corner, this right here says it all. So with like a 2.7, let's call it a 3, I really only needed like a 26, maybe 30% hit rate to be profitable. With a 1 to 2, 2R multiple, like 34%. All I needed was 34%. So I had 45% and I had a risk to reward ratio of 2.7. That was my R multiple, somewhere in between here and here. And I had a higher win rate. So that's all it took to be profitable. And when you start to understand that, you realize like, oh, my strategy doesn't need to be like an A plus. Oh my gosh, every time I hit, I win. I'm a winner. Like when you can train your psychology, your mentality to execute on your trades and manage your risk, you can be a profitable trader. Let's go back to the account. Screenshot this if you need to, man. I created this myself off of the numbers, the information. I saw it once from a mentor and then I recreated my own, obviously twice here. All right, going back to this. So, my average profitable trade, $1,717. Nothing special. Nothing special. I'm not going to lie. The last trade I ended up with was two different trades. One was on dollar yen for like $4,000. And then the other one was on Euro USD for $11,000. And it just happened to equal about 15 to 16. It was like 16 something. I got a screenshot. I'll put it up on the screen. It was like $16,000. And the truth is that I should have closed it that Friday. I let it sit over the weekend and just stall out and accrue swap fees, and then opened it closed it that Sunday when Tokyo opened. And the number just moved a little bit when I closed it, but it was still enough to be profitable. So I had hit like $21,000 over $200,000, which is plenty, right? Plenty. But when I closed it, yeah, it was right here, $20,671 in profit. Now, I'm going to show you what's amazing about that because I was actually down almost $10,000. And this is going back to execution and psychology. My average losing trade, $634. You can see that just fine. My maximum reach profit was, for one trade, again, was that Euro USD trade, $11,589. And again, I opened it in Tokyo, and I'll tell you what, my mentality just shifted. Maximum loss, $2,888. Like, not huge, not a big deal. It might be a big deal when you're not used to these numbers, but even in my personal account, like that's a bigger loss than I'm willing to would like to sustain, but I can sustain that kind of loss if the risk to reward ratio was good. If it was like, oh, I risked $2,800 to make $16,000, I'm okay with that risk to reward ratio. Like it's fine to me. It's a 5R multiple. That's great. And so this shows the profit factor of 4. So pretty much when I'm taking trades, like between my worst trade and my best trade, I still had a profit factor of 4. Look up profit factor if you don't understand it. But I also don't find it the most valuable thing. I really don't find it the most valuable thing. There's enough statistics in this and knowing this and that. And to me, that gets in the way of just doing the damn thing. Just trading. Just taking trades. And that's the kind of guy I am. I'm a Wild West, shoot from the hip, gunslinger. And if you understand what I'm saying, like most people can't do that. Most people can't do that because it takes a lot on your psychology. It takes a psychological toll. But let's drop down. This is what's really super information right here. Informative. Okay. So initially I just started dropping. And at one point I was down $9,000. So it was like, I didn't do that in a day. As you can see, I didn't do that in a day. You know, my trade's ticking. But then I started to get profitable. And it wasn't much. Then I gave a little bit back. Oh, got a little more. Gave a little bit back. Got a little more. Gave a little back. And right around here is when I watched this video. And a little interview with Abdullah Rashad. He's out there in Dubai right now. I actually got mad respect for the dude. I made a video like, why I'm subscribed to, but if you even watched that video, no one really did. The point of that video was to say, hey, at some point you got to stop watching other people trade and you got to start trading yourself. You got to start trusting yourself and trusting your edge and getting into your execution and your slipstream and being your own teacher. But I still like listening to other traders. And honestly, I needed this little psychological tilt to get back to who I am. And it started right around here.
I have no specific time frame or days that I want to trade challenges. If I see a challenge that I want to take, I take it.
Okay.
And as soon as I get the funded account, I find entries.
Okay.
So no no specific time for anything like that.
Okay. And then so I have a concept of like A setups, like A plus setups. These are setups that, maybe fundamentals are aligning, technicals are aligning, and those are the setups that I take. So do you take those for your challenges, or do you just sort of like maybe take like a B or less quality during the challenge just so that you can get through the challenge?
Exactly.
Okay.
So on a challenge, I'm more like, okay, get it over with quick.
Yeah.
And if it fails, okay, I start another challenge.
Okay.
Or sometimes I buy multiple challenges, and so I don't have to wait.
Okay. Yeah. Right. So, it's an opportunity cost. Yes. If you're waiting, like you said, you already made money. If you're waiting 6 months, not 6 months, but 3 months to pass to get to the funded stage, you wasted 3 months of time.
Yeah.
Okay. So you see these things as sort of like a ratio. Like
definitely.
Maybe, return on investment. You invest a certain amount, you invest 1 and you have to make 5 or 6 or so.
Yeah. So currently in this year, I think I have a 1-to-9 ratio. So for each dollar I spend in challenges, I get $9 payouts.
Okay.
And as long as this ratio doesn't change drastically, I think I'm on a good path, and that's what it matters in the end. Like how much you get paid in the end. Doesn't matter if I blow 50 or 100 or 200 challenges, as long as the payout is okay. I'm fine with it, because I'm not here to win a prize. I'm here to make money in the end.
Yeah.
And so right when I got this understanding that he was like, you know what, it's even the prop trading is a numbers game to him, that he wants like a 1-to-9 risk to reward ratio out of his prop trading. So if he buys, $1,000 in challenges, he wants payouts of at least $9,000 from those challenges. So if it's $10,000 in challenges, he wants $90,000 in payouts. That's his current risk to reward ratio. Like, many people would be fine with like a 2-to-1. Like, if you spent $1,000 and you ended up getting paid out $2,000, like, you'd feel pretty good, right? You made money, and if you lost the account, you could at least buy another one. You've proved to yourself that you can do it, so you can do it again. And that's where it came down to for me. It was just like, yo, man, stop wasting your time. Get back to gunslinging. And I saw a trade on USD JPY, and I'm going to show them to you. I was in a trade up here, and I got in on a short, and I closed it so freaking quick. It hurt. It hurt because I am the guy that waits for this. I am the guy that waits for this big movement and starts moving the stop loss here. And then when I get this big drop, I move the stop loss here. And guess what? I get the big drop again, and I start seeing double bottom action. I'm probably taking, after this, I'd probably be taking at least half off the table here and a full off the table here as a double bottom type of thing. And maybe all this whipsaw just wore me out. And I said, I'm good. I'll look for a new trade. But anyways, let's see. I can find the short a little better because the long a little better. Yeah, the long was in here. And honestly, I didn't even hold it for the full move because I got what I needed to pass the challenge, and I decided to move on. Yeah, it was in all this chop. And I got out right around here. It was basically a little something like this. And yeah, if I was in trying to pass the challenge, I would have sat, because it was like not a lot for me. I would have sat and held a lot longer. The other trade was Euro USD. And to me, it was just a double top. It was just like, okay, it came up. It's a double top. It's going to get some rejection. And I went in heavy. Took 12 lots. Took 12 lots out on this. I saw this over here. Let me turn off some of this stuff for you, because you guys don't need to see my volatility contractions. You don't really need to see where the liquidity is. But that's basically my setup. It's simple. It's not as simple as just price action and smart money concepts, but they're in there. They're in there. So yeah, it came right back up, came back up real strong, blew right out of the Bollinger Bands. So the volatility was high, and I'm like, you know what? Looking at this, I zoomed on in. And I started feeling, I'm like, this is interesting. You're going into Asia, and you're just sideways. And I said, you know what? I'm not going to be awake for London, but I would have entered right off this. Put my stop loss above this. Luckily, I was able to get an entry somewhere in here, and all I needed was this, because I took 12 lots out. All I needed was this trade. And luckily, it's all that I was able to get. It's 5R multiple right there. And I was just like, you know what? I got what I needed. And plus, I felt good because it was in an uptrend technically. I expected the rejection. But I also expected, with the EMAs fanned out like this, the dragon was awake. Time to take profit. So anyways, those were the trades I took. And the whole moral of the story is you can see all of this kind of dilly-dallying around for days on end, blah, 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 blah. And then finally I'm like, fuck this. Let's fucking go. Let's do the damn thing. If you're going to do this, do this. And it was all because of what he said. He just was like, no, like I don't wait for my A setups and like get all like super patient, because to me that's almost scared. It's timid. It's just like, I am so afraid to lose. If I do anything wrong, it's going to cause me pain. And I'm like, you got to embrace that pain, embrace that fire, let it burn you up and learn from it. Don't act from it, learn from it. It's like, let the wound, the healed wound, teach you. Don't just go in, get battle scars, and then forget about them. Let them be stories, reminders, and not ones that you're cowering around and be like, I better not, it's more like, I should not do that again. Instead, here's a good protocol to prevent me from doing that. Moving my stop loss. Guess what? I can no longer move my stop loss. I close down my computer. I walk away. When I see myself in profit, here's where I move my stop loss, and I don't take profit until this. Now, I'm an intuitive, subjective trader, and so I make a lot of mistakes. Like, I had a Solana trade, and it was right before it took off to the goddamn moon, and I just took a couple grand off the table. I was like, hey, I'm happy. We'll drop down again. Average win, average loss. Obviously, that should be bigger, but looks like I made more money on shorts. Whoop-de-doo. Again, I don't really care. I don't really care about this kind of stuff. To me, it's like, what is the market trend? And if I need to, I invert. I go, well, what would that look like? If I'm like all about shorts, but I've only known how to take longs, let me flip this all over. And now I'm starting to see, oh, look at this. There's a big wall of resistance right here. So normally I'm super used to taking longs, and this would have been a long entry. Well, guess what? It's inverted. So now you learn to teach yourself to take shorts, and now you're taking shorts. And to me, honestly, yeah, it's looking right for a short, except for the fact somebody would draw some sort of ascending wedge, ascending triangle. Look out. And to me, it's like, no, it's an uptrend. And even the RSI is in an uptrend. So this is probably a good opportunity for a long. And with that, I'm going to get off and go ahead and take a long on Euro USD. You know what it is. So, or look for an entry. I'm not seeing any type of... That's not what this video is about. I just wanted to leave y'all with that and explain to you that all of this additional information is not super useful to me. If I see the setup, I take the setup. I don't care if it's a Friday or it's a Monday or it's a Wednesday and I'm about to hit the swap rollover, times 3. Sometimes, yeah, it's caused me to close winning trades that should have stayed open. I should have just paid the fees. Like, I swing, I stay in trades. So while those are factors that I should consider, I actually don't consider them anymore because they don't help me make money. And that's what it is at the end of the day. It's not about this perfection and fine tuning this number and that number. It's like, sure, yeah, if you are someone that likes the data and likes the information, you think it's going to inform you to make better decisions and refine your trading, great. I'm not there yet, apparently. Or I've tried going there really, and now I'm coming back to, you know what? I just want a solid strategy, an edge in the market, and the ability to execute that. And then I'll manage my psychology after the fact, because that's how I make money. And that's who the fuck I am. Like, I can show you my P&L and I can show you all this self-built stuff. Why is it so zoomed? Oh yeah, I zoomed in. But like the ultimate thing is that, to me, like, yeah, I can do all this stuff and like, look at all my stuff, look at all my numbers, and I do all this cool things, and I journal. Um, but at the end of the day, for me, like, I'm making money when I'm just flowing with it, and I'm not putting too much emphasis on this or that. And with that said, final message. All you got to worry about in trading is figuring out how to master 2 of these 4 things. 2 of these 4. You can be proficient in the rest. So number 1, an edge. Find a strategy that has the probabilities in your favor. Test it through a variety of different market types. Figure out what market works best. Done. Number 2, execution. The ability to execute on those trades. And some of that's just showing up. Like for me, execution is just showing up. It's just showing up at the right times when I know liquidity is at its highest and markets are moving at their most, and I show up. I'm there, New York Open. I'm there, Tokyo Open. And I'm available. If my energy is right and my mind is right, I'm available for trades. If it's not, if I'm sick, if I'm busy, if I'm overwhelmed, if I'm stressed, maybe I'm not there. Maybe I'm looking at it, but I'm like, just not feeling a trade today. I don't want to put myself through that emotional tax, that energetic tax of being in a trade and not feeling good about it, being distracted because I over here in the back of my mind, I'm in a trade, but I'm trying to live my life. Again, Diaries of a Swing Trader. Number 3, risk management. Risk management. To me, the only thing that should answer whatever risk management strategy you choose is, if you took a trade, could you sleep? Could you walk away from your screen comfortably? Go to the bathroom, make a phone call. If your mom called, dad called, lover called, sister called, someone called, and they were like, hey, I really need to talk to somebody right now. I need your full attention. Like, I'm hurting right now. Would you be able to go, yeah, sure, no problem. I got my stop loss set. I got my take profit, or, at least a good entry. And I'm going to go wait and see where that take profit, is. Like, at least I know I'm not going to lose my ass while I take this phone call on something that actually matters. On something that actually matters. The people you love, the life you're living, leaning on one another, being there for one another, the stuff that actually matters, right? So number 1 question to answer regarding risk management, in whatever way you want to choose to do it, is, can you sleep with an open trade? Because if you can't sleep, if you can't take that phone call, if you can't walk away, then you are risking too much per trade. You need to find that. And that is what pulls. Sounds like I said poo a little bit. It pulls right into the 4th psychology, right? So when we take losses, how do we manage that? Do we revenge trade? Do we have like barriers in place to prevent us from losing more money, from taking dumb trades? And sometimes, our psychology is messed up. We're still feeling the loss of our previous trade, or just the fact that we left money on the table in our previous trade. And therefore, like last night, there was bullish divergence on the 15-minute chart on Bitcoin, and Bitcoin's been in an uptrend. And I was just like, this is a quick, easy trade. It's a day trade, basically. Maybe I close it in the morning. Maybe I close it before I go to bed. And instead, about 15, I think it was 18 minutes later, I closed it. Scratched out for like minor loss, $35 with fees, $98 right here. 18 minutes. And so that's what we got to understand, right? Is those are the 4 foundations of profitable trading. And to me, the only 2 that matter is edge. Finding a profitable strategy that you trust and works in the market. And again, like I just showed here, it doesn't need to be 100% of the time. It doesn't need to be 80% of the time. It can be 44% of the time. And you can still be profitable. It can be 21% of the time. And if you have a risk to reward ratio of 5 to 1, you're going to be profitable. 4-1, you're still going to be profitable. 5-1, you're actually going to be making money and enjoying yourself. So that's a thing to remember. So the second thing that I'm really keen in on is risk management, which again comes back to the risk to reward ratio. Just like be willing to lose money because you're paying to play. That is the business expense of trading, is losing trades, making mistakes. But you shouldn't lose trades to such a degree that you put yourself out of business. That's not good business, right? You got to mitigate those losses. And that's what you can see in my account analysis is my average losing trade, $634. Whoop-de-doo, Basil. It's a $200,000 account. My winning trade is 2.7 times that, or my average profitable trade is 2.7 times that at $1,717. Again, not freaking huge money, but let's say those are payout numbers and I take 10 trades and let's see, 6 of them hit. That's $10,300 in profit. Okay. Let's say the 4 trades that I took that I lost, 634, 2,536. So I just made $7,764 in 10 days, 10 trades. I don't know about you, man, but that's a great take-home salary for a month. If you take 10 trades in a month and that's what you end up with, man, that's what we're all here for. Let's not even front, man. We're not here for the freaking Lambo. You're not watching my channel for the Lambo. You're not watching it for the private jet. You're watching it to create a living and income and provide for you and yours. Okay? That gets to level up in the future. And hopefully, yeah, one day if we want and we can and we need it or find the value in it, sure. Maybe we rent that PJ, buy that PJ. Till that time, though, right now, this is what we're focused on. Creating a damn living out of this profession. With that said, I'm out. It's been too long. Got more videos coming. So if you enjoyed any part of this, please like, subscribe, share it with a friend that's a fellow trader or investor. It's good to see these numbers. It's good to get a sense. And it's really good to see these numbers and get a sense as well. Like when you take bets, take asymmetrical bets. That's what crypto is to me, man. I could lose, the $1,000 I put in, but I could make $5,000. And in crypto, it's even better. I could make $30,000 off that $1,000. I'm willing to lose that $1,000. I'm not going to take a bunch of those trades. I'm going to take some things that are more guaranteed. But again, nonetheless, it's good to see these. Share these with somebody. Like, subscribe, high five your mother, and be good.